Hi everyone, welcome to Values. Today we're going to look at a company called Humacyte, which is in the business of bioengineering human tissue, and it is merging with a SPAC called Alpha Healthcare Acquisition Corporation, and they're merging with a value of $1.075 billion, and at that valuation, it's $800 million for the enterprise value plus $275 million in cash. And basically, if you wanted to buy this company today at this SPAC pricing, it would be $13.40, and given a $10 base, you'd basically be looking about at $1.44 billion, which in my opinion is still very cheap, because this company just offers some really high potential. So why does it offer this really high potential? So firstly, their products are in clinical stage trials right now, so they've got quite a few products in phase 3 trials, and basically phase 3 will start in 2022. So after next year, when they do the phase 3 trials, they'll basically be looking for approval, then commercializing their products afterwards. So 2023 will be when they start to commercialize and start to realize some incredible revenues. So as they put here, they're trying to target a $150 billion market, and they think they can generate up to $12 billion once their products are launched, and in 5 years after that, they think the peak value would be around about $12 billion, which is pretty extraordinary. And now you can see why I think this company is very cheap. So here's the estimated revenues. In 2023, they think they can get about $600 million from trauma patients and $1.3 billion in AV access to do with dialysis, and that's looking at about a $1.9 billion revenue stream in 2 years time. So you can kind of see, like, in 2 years time, they're generating $1.9 billion, and the current valuation is $1.44 billion right now. Like, you're generating more revenue than your current valuation right now, so you can kind of see why it's selling at a really cheap price for the potential that it offers. That, hey, next year, once they get approval, they could be a $5 to $10 billion company. Once they commercialize and start generating revenue, they'll be like a $20 to $30 billion company. And by end of like 2027, when they can generate about $12 billion from these other areas, this company could be at least a $120 billion business, which is pretty extraordinary, because you're looking at a company that is so tiny right now, but they've got this incredible product of growing human tissue, and the application is going to be extraordinary, and it's going to earn them some extraordinary revenues. So you can kind of see why I'm pretty excited about this company, and why the valuation, I kind of just don't believe why it's so lowly valued. I think a lot of people have not looked into this company and seen the incredible potential of this company, though you still have to stay in for the long term, of course. It's not something that you stay in for the short term and hope to generate something in a few months. I think if you buy into this company, your upside is in the next 2 years. So if you can hold for the next 2 years and the company's successful, you're going to get a really good return, but that's only if the company is successful. Of course, these things come with a lot of risk, but yeah, like, from what I've seen, I'm really impressed. I highly applaud you to do some research behind this company, and you might be impressed as well. Mind you, this presentation slide is very graphical, so word of warning, I guess, that if you're not someone that's that you like to see the whole kind of medical things, like particularly like injuries and surgeries and stuff like that, then yeah, like, the presentation might not be for you. Hence why I've just cut to the financial slide, which is the main one for you anyway. So yeah, I think it's definitely quite a thing, like, that this company could in the future generate such large revenues. And a company, Alpha Healthcare, has a history of taking another company to public, DermTech, which has been incredibly successful, going from that base pricing of $10 to the $79. So you got to give it to Alpha Healthcare, that they do have guys who do have an eye for this type of company. And yeah, like even though DermTech came on the market at 2019, and in it didn't really do much for like a year. So that's the one thing you could also be looking at with this company, that hey, medical companies don't do a lot until they get to the near stage of approval. And the cool thing about Humacyte is that they're in phase 3 trials right now, by next year. So the waiting time isn't that long, and I guess the same thing would have been with DermTech, that they were close to commercializing, and the minute they commercialized, the stock just skyrocketed. So you could take the chance of like, hey, we'll buy into DermTech next year when they're about to commercialize. And yeah, you could always take that strategy and there's still going to be an upside. Or you could potentially buy it today at a 1.44 billion valuation on this SPAC pricing, and you could get a really low pricing, and as they start to go into phase 3 trials and commercialization, yeah, you could look at a significant increase before anything's really happened with the company. So that there's that case as well. Or there's the other case that the company pricing doesn't move that quick for a long time until they actually commercialize in 2023. And by that time, the upside will be extraordinary. So it's kind of like a decision on an investor's point of view that, hey, are you a long-term investor? If not, you could also buy next year and not have to wait so long. But I guess it's one of those questions, like if you're going to be waiting for them to do well to begin with, you might as well just buy in while they're cheap. And yeah, like, they've really, I think they've proven that they must be pretty impressive to have a company like Fresenius to invest $150 million. So Fresenius is this company that is worth $21 billion on the market right now. So for a $21 billion giant to put $150 million into your company, and also to be a partner for your product when it's commercial. So Fresenius is going to help them generate $1.3 billion when they come to commercial, and then another $1.7 billion 2 years after that. So Fresenius is going to be a massive partner for this company. They've seen the tech, they've done their due diligence, and are very happy about it to give them $150 million and also to partner up with them. Like we're no experts in this field, but if a company like Fresenius, who is an expert in this field, likes it that much to put money and to partner up with them, then I think that's a huge validation for what the company is doing. So yeah, like I think there's so much potential in this company that this 1.44 billion valuation just seems so minuscule in the scheme of things that the upside's definitely worth it compared to the risk, but that's my opinion anyway. Definitely let me know what your opinion of this company is. You're interested in getting into it, or if you've got any questions, post below. But definitely, out of a lot of companies that I've reviewed, like I think this one comes out as one of the really, really high potential companies that could also be succeeding in an extraordinary way. And I'm really impressed with the people involved with the company. They're world-class people with PhDs. They write research papers and all that, proving out what they've found. And yeah, like I think there's just a lot to like about it. So yeah, like you can also browse the website and just look at the team, look at their publications and the trials. But yeah, like at the end of the day, I think this company has proven out what they're doing. So yeah, I think it's definitely worth considering, worth coming onto the site, reading about the team. But I'm going to take the whole signal of Fresenius signing up with this company by giving them money and then partnering up with them to generate enormous revenues. And I think that gives me enough confidence to say, yeah, like if Fresenius is happy, I'm probably happy. Like they know way more than me. And also Alpha Healthcare, they've got a proven history of bringing companies to public that do well. So I think from the SPAC side, the due diligence looks good. From Fresenius' side, I think that looks good as well. And that's enough validation from those sides to kind of make me feel pretty good that, hey, the tech is good. And it's just a matter of, can they get through the phase 3, which is usually the easiest part. Usually for me, I think phase 2 is always the hardest. And then once you get to phase 3, because phase 2, you're trying to prove out what you have. Phase 3 is trying to do it on a broader scale. So usually doing it on a broader scale isn't as difficult as phase 2. So I think, yeah, like everything shouldn't be too bad for them. And then once they get approval, get commercialized, things are going to be brilliant and extraordinarily great for everyone. And also like you're investing in a company that is going to produce some really amazing like outcomes on a medical kind of perspective. So it's really cool to invest in a medical company helping people, and at the same time you get an extraordinary return as well. So yeah, like I think that's the most ideal outcome any investor could have. But of course, these things do come with risks. If things do not succeed, it goes to research and development again, and then they have to keep waiting. So you've got an initial product that, hey, if the initial product doesn't succeed, you could be waiting another couple of years before things get going again for this other product. So the cool thing is they have many products on the pipeline, and as time goes, eventually one of the products or more should succeed. And that's the thing, you don't actually need a lot to succeed for this company to be worth more in the future. That's why I look at this and I go, $1.44 billion is incredibly cheap, and that's how I think I'm seeing it anyway. But yeah, like let me know what your thoughts are. Until then, good luck investing, everyone.